Bajaj Finance, a leading non-banking financial company in India, has received approval from the Reserve Bank of India to resume sanctioning and disbursal of new loans under its eCOM and Insta EMI Card products. This decision follows the company's compliance with RBI guidelines and its formal request for a review. The RBI had previously directed Bajaj Finance to halt these transactions in mid-November due to non-compliance with digital lending guidelines, specifically the non-issuance of key fact statements to borrowers under these products. With the lifting of restrictions, Bajaj Finance can now resume issuing EMI cards and providing loans in the eCOM and digital Insta EMI Card segment. The question stands, how far is this aimed at? Hi everybody. Bajaj Finance, a subsidiary of Bajaj Finserv, offers a diversified lending portfolio catering to retail, SMEs and commercial customers. The company reported a 21% increase in consolidated net profits for the final quarter of FY24, with total income rising to Rs 14,932 crore and net interest income increasing by 28% to Rs 8,013 crore during this period. The consolidated financials of Bajaj Finance include its wholly owned subsidiaries Bajaj Housing Finance Limited and Bajaj Financial Securities Limited, as well as associate companies Snapwork Technologies and Pennant Technologies. A question pertinent to RBI review process would be, what steps did Bajaj Finance take to seek a review from the RBI? What criteria did RBI consider before lifting the restrictions on Bajaj Finance lending activities? How did Bajaj Finance demonstrate its compliance with RBI guidelines during this review process? Let's figure it out one by one. To seek a review from the RBI, Bajaj Finance likely undertook several strategic steps. Number 1 is internal assessment. Bajaj Finance likely conducted an internal assessment to understand the specific RBI guidelines it was found to be non-compliant with. This assessment would have involved reviewing internal policies, processes, and systems related to digital lending. Number 2 is engagement with RBI. Bajaj Finance would have initiated communication with the RBI to seek clarification on the areas of non-compliance and to understand the steps required to address the issues raised. This engagement might have involved written correspondence, meetings, or presentations to regulatory officials. Number 3 is remedial actions. Based on the feedback received from the RBI, Bajaj Finance would have implemented remedial actions to rectify the identified non-compliance issues. These actions could include updating internal processes, enhancing compliance monitoring mechanism, and improving customer communication practice. And number 4 is documentation and evidence. Bajaj Finance likely prepared documentation to demonstrate the remedial actions taken and the measures implemented to ensure future compliance with the RBI guidelines. This documentation would have included policy updates, process manuals, training records, and evidence of internal controls. Secondly, regarding the criteria considered by the RBI before lifting the restrictions on the company's lending activity, the specifics would depend on the nature of the non-compliance issue and the regulatory framework involved. However, some general criteria that RBI might have considered include: Number 1 is satisfactory remediation. The RBI would have assessed whether Bajaj Finance had taken adequate remedial actions to address the specific non-compliance issues identified. This would involve evaluating the effectiveness of the measures implemented and their alignment with the RBI guidelines. Number 2 is compliance assurance. The RBI would have sought assurance from the Bajaj Finance regarding its commitment to maintaining compliance with regulatory requirements in the future. This could include commitments to ongoing monitoring, reporting, and internal controls. Number 3 is customer protection. The RBI would have evaluated the potential impact of lifting the restriction on the company's customers and the broader financial system. This assessment would consider factors such as consumer protection, fair lending practices, and systematic risk. And number 4 is market stability. The RBI would have assessed the implications of lifting the restriction on market stability and confidence. This would involve considering factors such as Bajaj Finance market position, its financial strength, and its role in the financial ecosystem. Lastly, to demonstrate its compliance with RBI guidelines during the review process, Bajaj Finance would have likely provided the following. Number 1 is evidence of remedial actions. The company would have presented documentation and evidence of the action taken to address the specific issues identified by the RBI. This could include policy updates, process improvements, and training record. Number 2 is internal controls and monitoring. Bajaj Finance would have demonstrated its internal controls and monitoring mechanism to ensure compliance with RBI guidelines. This could involve providing documentations of compliance check, audit findings, and risk management practice. Number 3 is customer communication. Bajaj Finance would have showcased its practices for communicating with customers, particularly regarding loan products and terms. This could include evidence of key fact statement issuance, transparency in loan terms, and customer complaint handling procedures. And number 4 is commitment to compliance. Bajaj Finance would have reiterated its commitment to maintaining compliance with the RBI guidelines in the future. This could involve providing assurance of ongoing monitoring, reporting, and cooperation with regulatory authorities. Overall, Bajaj Finance would have sought to demonstrate to the RBI its readiness to resume lending activities under the eCOM and Insta EMI Card product by showcasing its compliant effort and commitment to regulatory requirements.
Hope you liked the video. Let's unlock together your full potential and achieve remarkable success in the world of business. If you are new to the channel, do like, share, and subscribe for more such content related to business and finance. Till then, goodbye everyone.